everyone. Welcome to the West Business Development Center. My name is Kelly Geyser, and I'm the event coordinator at West, hosting today's webinar, Basic QuickBooks. Thank you. West is a non-profit funded by the Small Business Administration. We are both a women's business center and small business development center for Mendocino and Lake County. And through federal and state agencies matched with local community contributions, it is your tax dollars that allow us to provide our services to you for free. Our services include one-on-one counseling, webinars, loan package readiness, and advising to small business owners and entrepreneurs at every stage of business development. We also have a pool of expert advisors that cover niche business needs from permitting to HR and e-commerce. If you'd like to learn more about becoming a West client, please do visit our website or give our office a call. This is our disclaimer, but basically this webinar is for informational and educational purposes only. You can read this in more detail on our site. And additionally, just to note, we are recording today's webinar, so an email with a link to the recording with a copy of today's slides will be sent to anyone who registered. Please keep an eye out for it in your inbox or possibly spam folder in the next few days. Without further ado, I'm pleased to introduce today's instructor, Eddie Landeros, who will present today's webinar, Basics of QuickBooks.
Thank you, Kelly. Well, good afternoon, everyone. My name is Eddie Landeros. I will be your instructor for today. Just to give you a little bit of my background and how I got to where I am in doing workshops and helping Small Business Development Center and so forth. I'm currently an associate professor for San Diego Mesa College and Southwestern College. These are two community colleges down here in San Diego. I'm currently in San Diego. But I also have a consulting company, a finance and business consulting company. I specialized in doing business appraisals, business valuations for a lot of legal proceedings, legal cases. When somebody gets divorced or somebody dies, or there's a dispute between owners and it gets to court, or when attorneys are involved, sometimes they need to value the business. So I do that analysis, and I also do a lot of business plans that require a lot of financial analysis, financial projections, and so forth. Aside from that, I spent a number of years in the banking industry as a business lender. I have a master's in business and accounting. And that's how I got into into teaching accounting, teaching business, teaching finance. And my experience with QuickBooks comes from having my own business and having other businesses throughout my career. So I'm going to try to give you a very brief summary of what QuickBooks can do and how you can utilize QuickBooks for your business, for your small business, for your bookkeeping. But QuickBooks is very similar to Excel in the sense that it can be very easy to use, very easy to make some calculations, but it can also be very, very complex. So QuickBooks has different various types of memberships. I'm going to go over some of the most common types of memberships. And there's also two types of QuickBooks. There's the online QuickBooks, which I would recommend that you get. It's about $20 a month or 25, but the first 6 months you get usually you get like a 50% off. So you're essentially paying like $13 a month for the first few months to sort of try it. And there's also the desktop version. A lot of the slides that I have to do with the desktop version. The desktop version is, a CD that you purchase. For those of you that remember CDs, they just come in a box and you put it in your computer and you download it into your computer. The risk with that is that, you're going to spend probably $200 on it. And you don't have to pay anything else ever again. But the risk is if something happens to your computer, if you lose your computer, if it crashes and you're not able to back up that data, then you're going to lose the program and you're going to lose your information. So that is the risk. I personally have the desktop version, but I'm constantly, doing backups because you can download and you can download a backup into a USB, and if something happens, then I can use that file. But this is a very informal workshop. If any of you have any questions, feel free to put it on the chat or put it on the Q&A. Kelly will help me with that if there's a question that I could answer. So this is QuickBooks. This is how it looks on the online version. It's called the dashboard. And again, QuickBooks is an accounting program. So for those of you that are somewhat familiar with accounting allows you to keep track of your expenses and your revenue. And so, with the objective of generating reports that are going to help you manage your business more efficiently, and look at your profit and loss report, see how much money you made in the last month or last year or last 2 years. Look at your balance sheet, which sort of helps you identify the health of your company or the value of your company by looking at the company's assets, liabilities, and equity. This is not an accounting course, so I'm not going to get too much into it. I'm going to assume that you already understand these concepts. But again, if you're a small business owner, QuickBooks is a great way for you to keep track of your expenses, your revenue, and cash flow, and so forth. So again, this is the homepage. This is what it looks like when you sign in. You're able to customize this homepage. You can have a section that shows you all the invoices that are unpaid. If you remember accounting, your accounts receivable tells you how much money people owe you at any given time. So you can have this on your homepage. You can have a list of your expenses, which lists the top categories of different expenses. You can have a summary of your bank accounts, your credit card accounts, your profit and loss report, your sales, and then other items that you are able to customize. Again, it's your QuickBooks, so you get to choose what you want to see in your homepage. On the left-hand side, you'll see the different sections that I'm going to cover under the desktop version. So it's kind of the same thing. It does differ a little bit, but this is what the desktop version looks like. If you're able to buy a CD online and download it onto your computer, this is what it's going to look like. I have an older version, so it's probably not going to look exactly like this one, but it's basically the same thing. So this is the homepage. You can also customize this. So when you log in, automatically you'll see about 5 different sections. The first section is for vendors. The second is for customers, then employees, company, and banking. And I'm going to go through each one of them and try to explain to you what you can do in each section. Again, very similar to Excel in the sense that it can be very easy to use if you just input your sales and your expenses, that's it. Or it can be very complicated where you can manage, very sophisticated company with many customers, many vendors, many employees, and so forth. So, but again, I'm going to try to cover the basics. So let me get right to banking, to chart of accounts.
Really quick, Eddie. Do you know how often QuickBooks update their software, and if it's the online version, is it done automatically?
Yeah, it's updated automatically. I don't have an exact number for that, but I would think every year they're making adjustments, especially with tax information and so forth.
Great, thank you.
Mm-hmm. So one of the sections that you're going to spend a lot of time in is your company. And the company section has a link that says chart of accounts. When you sign up for QuickBooks gives you a list of questions that you have to answer, sort of like to register, right? So one of the businesses that I used to have was a restaurant. I had a restaurant bar for about 6 years. And when I started using QuickBooks, I started using the online version for that particular business because I wanted other managers to be able to access my account and also my accountant to be able to access my account. It was just a lot easier. So when you sign up, it asks you a series of questions. So like, what type of business are you? Are you an LLC? Are you a corporation? Are you a sole proprietor? And then it asks you what type of industry. I remember when I inputted restaurant bar, it already gave me a list of accounts that the system knows that I'm going to use, like inventory. Accounts receivable is not very common in the restaurant industry unless you do a high volume of catering, but it still gives you that account. But it's not going to give you breakdowns of different types of accounts receivables or inventory, things like that. So the system, again, gives you a list of accounts that they think you are going to use. If you have an account, like let's say you have a restaurant and you do a lot of catering and you want to break down sales by, restaurant sales, normal sales, and then you want to add another item that says sales catering, or maybe you want to break down your breakfast versus your dinner, and you want to break it down. There's a link on QuickBooks that allows you to create a new account or delete an existing account. So the types of accounts that QuickBooks is going to give you are going to be either income accounts, which are your sales and other types of income, expense accounts, which are all the expenses associated with your business. It could be advertising, it could be payroll, it could be cost of goods sold, office supplies, utilities, name it. It's going to be an asset account, which, going back to what I said in the beginning, there's the balance sheet portion of a company, right? And a balance sheet is going to list your assets, which is what you own, your liabilities, which is what you owe, and then your equity accounts, which are accounts that show how much money you've invested in the company and how much money you have in retained earnings. So based on QuickBooks AI system and their experience, they're gonna give you a bunch of accounts that you can work with. But if you don't see one that you don't, or if you don't see one that you normally use, you can add it. And it's gonna ask you, is it an income account, expense account, asset, liability, and equity? So just remember, what type of account it is. If it's an expense account, then obviously it's going to be an expense account. I think it gets tricky when you get to assets, liabilities, and equity. But just ask yourself, is it something that I own? Is it something that I owe? Or am I investing in the company? That should help you sort of decide what type of account it is. Under the company section, you also have a section where you can create items and services. If you are selling products, this example right here is for a bakery. So if you are selling bagels, bread, organic bread, non-organic, you can create these products because it's going to help you when you want to create invoices. Let's say I have a bakery and I do catering, and I also have school contracts where I sell bagels on a wholesale capacity to, San Diego Elementary School District. So I'm going to give them an invoice, and to make my life easier when I make that invoice, because you can also create invoices through QuickBooks, is to create these items and services, because when I'm creating an invoice, it's going to ask me, who is the invoice for and where you're selling, right? So if I'm selling, 300 bagels and 300 pieces of bread that are non-organic, then it's easy for me to just click that and make the invoice. The banking section, and these are the two sections in my experience that you're going to use the most: the company section and the banking section. The banking section is where you're going to record your deposits and your expenses, or your sales and expenses. Honestly, when I had my business, well, I've had a few other businesses, but the one I did the most in terms of bookkeeping and QuickBooks was the restaurant. So to make my life easier, what I used to do is, and what I usually recommend to my students and my clients, is to always have a separate business account. And under that business account, run all your sales and run all your expenses. At a restaurant, it's not cost effective to keep track of all your daily transactions. What I used to do is because all my sales would go through my bank account and all my expenses would go through my bank account, the same business account, I would wait for the bank to generate the bank statement, the monthly bank statement. So as soon as I got the monthly bank statement, I used that to start inputting stuff into QuickBooks. I think that just makes your life easier. You can do it once a month. For my restaurant, I used to spend, maybe 6 to 8 hours a month in doing that. But I have a background in accounting, so I did more stuff than just inputting stuff. But I'll give you an example. If I got September's bank statement and it showed a deposit on any given day of $5,000, then I would input that as a deposit. And once you record a deposit, it'll ask you which bank account does this deposit go to. I had an account at Citibank. What date? Where is it coming from? So I would just say, regular sales, right, or clients. Here's a section where you have to allocate that amount to a specific account. And here I would allocate it to sales. It's very important that you allocate that to the right account, because when you create reports, let's say you're creating a profit and loss report, it's going to extract the data from the sales account and also from all the expense accounts. So at the end, it'll give you how much money you've made. But if you allocate it to like a different account, let's say you allocated it to inventory, then it's just going to make a mess in terms of accounting, and you have to hire an accountant to sort of fix it and so forth. So it's very important for you to allocate it to the right account. If it's a deposit, most likely is going to be sales. However, let's say you need cash and you want to invest $10,000 more into your business, you can make a deposit on your bank account and it'll show on your bank statement as a deposit, but you would allocate it to equity or to common stock because it's not sales. It's that's an accounting thing. You have to be very careful not to count it as sales. And also, you don't want to pay more taxes than you have to, right? So it's really not sales. It's money that you're investing in the company. Another example would be, let's say you get a business loan and they give you $25,000 and you deposit into your bank account. You can still record the deposit, but make sure you allocate it to the right account. So anyways, it goes to cash. But in that case, because it's a loan, it would be allocated to a liability. So again, if you have a background in accounting, you're going to understand what I'm saying. But if you don't, if you just want to use QuickBooks to keep track of your revenue and expenses, just keep track of your sales and expenses. And then at the end of the year, you can hire a CPA, which is what a lot of business owners do, and have them do the what we call journal entries and fix some things. But so yeah, this is where you would record deposits. On the banking section, there's another section that says write checks. And this is, to keep track of your expenses. When you write a check, it's going to ask you who do you want to pay, how much you want to pay, the date. You can put a memo. And here's where you choose the expense account. So in this case, CDC Small Business Finance is a nonprofit lender that helps businesses or business owners that are not able to get loans with banks. So so they do business loans. So if this particular check is a loan payment, but when you do a loan payment, as you probably recall, a portion of that goes to interest and another portion goes to principal. So here you would choose both accounts. You would choose the interest expense because it is an expense, and you would allocate it to a liability account, which is a loan account, and you would allocate the rest to that account because automatically it will reduce your loan balance. If you were paying your consultant or your attorney or whatever, I mean, you would just allocate it to that expense account. Okay, and then at the end, it'll ask if you want to save it and close
Really
it.
quick,
Yes.
just wondering, is this format similar to the online version, or is the process hopefully similar?
Yeah, the process is very similar. What I'm going through is the desktop version. So it's the version that you download onto your computer, and it has a couple more features, depends on the type of CD that you buy. But yeah, essentially it's the same commands. You just got to find it on the online version.
Great, thank you.
When you're ready to print checks, there's a section there that says, print checks, and you select the checks that you want to print. QuickBooks does have the ability to print checks for you with your company information and the check number and all that stuff, bank information. So you just got to order them. And when you order them, you get the blank checks, and you just put them through your computer, and you can print those checks. If you want to do an individual expense, something where you did not use a check, let's say you used a debit card or you used cash, you went to the ATM and withdrew cash and paid someone or something like that. Here's where it says check register. Here's where you would input the individual transaction. You would put in the date, who did you pay, the memo, the payment that you did, and then you would record it. On the online version, this is what it looks like. So it's kind of the same thing. That's what I was saying. It's kind of the same thing. You just got to find the right section. So here you can put the type of expense, who did you pay, and then the balance and how much did you pay. QuickBooks also has a way for you to keep track of your expenses by just taking a picture of your receipt, which I think is pretty cool. And also has other options that allow you to keep track of your mileage too. As you probably recall, at the end of the year, your accountant requires you to give him or her a number of miles that you drove that year if you are selecting the mileage method to do auto expenses. It has to be exact, and the IRS is pretty picky about that. You have to really keep track of where you went and the reason why you went to go visit that client or that supplier and so forth. But again, it has to do with these features are not available in every membership. So depends on what type of membership you get, the more features you get. I would just get the essential one, which is again $20 a month or something like that, and just play with that and see if you like it. And then you can always cancel it at any time. Okay. So the vendor section. QuickBooks has the ability to keep track of your vendors, your payables. So whenever you get a bill, you can input it into the system, and the system will automatically record it as a liability because it's something that you owe. If you are ready to pay those bills, you can go to the section Pay Bills, and it'll allow you to select the bills that you want to pay, and it'll automatically make the check for you, and you can print them. Sometimes also QuickBooks has the ability for you to keep track of your inventory. So let's say, I have one of the other businesses that I used to have was a candy factory. So we would get shipments of sugar, pecans, peanuts, milk, dried milk, things like that. So whenever we would get the shipments, I could enter the bill, and it would automatically send it to my inventory account as raw materials. Again, QuickBooks can really help you do a lot of stuff, but if you're new to QuickBooks, I would not do these because, if you do fully understand how it works, then yes, I would use it. But if you don't, I would stick with just revenue and expenses. And then after a while, once you're more comfortable, you can always start using the other features. But here, again, it helps you keep track of your inventory, which is sometimes important for manufacturers, wholesalers, retail establishments that have a lot of inventory and so forth. When you get the bill, it'll a page like this will pop up where you can put the vendor, how much you owe, when the bill is due, and then here you allocate it to the expense account that it belongs to. So in this case is utilities, right? But it's not an expense yet until you pay for it. And that is if you are doing a cash-based accounting system. Again, I'm talking about different types of accounting methods that accountants use. There's two types. There's cash-based and then there's an accrual-based. If it is accrual, then it will count it as an expense, but it will also count as a liability as an accounts payable. If it's a cash basis, then it will not. But again, I don't want to confuse you, but just know that it does allocate it to that expense account, and sometimes you won't see it under your expense list until you pay it. When you're ready to pay the bills, again, it'll list all the vendors that you have and which ones you want to pay. Once you select those, it'll record. You'll be able to print them and then send a check if that's the case. When it comes to inventory, like I said a couple minutes ago, you can allocate it directly to the inventory and keep track of that. If you enter bills against inventory, sometimes you get the bill, but you don't get the inventory, so it does give you the option to record it. When it comes to customers, you can also keep track of your customers. Not a lot of sorry about that. I need to hydrate. Some businesses, like when I had the restaurant, I didn't keep track of my clients because at any given day I would have like 100 clients. So it doesn't make sense. It's not cost effective. But let's say you have a construction company, and that construction company has a few big public accounts. Like let's say you do work with the city, and you do work with the port, and you do work with the county or the school district. Those are big clients, right? Large clients that that you want to keep track of, especially if you're in construction. If one project is not if you're doing a project for the elementary school district, it's not going to be the same project that you do for this city, right? So so you want to maintain those clients separate, and you want to keep track of certain expenses and certain revenues associated with those clients. So here's a good way for you to do that under QuickBooks. You can create an invoice, which we talked about in the beginning of the workshop. You can create the invoice, and you'll select which products you are billing or services that you are billing. By doing this, you will automatically create an accounts receivable item, which is, I'm creating an invoice, so that means they owe me money, which means it'll be allocated to accounts receivable. If I receive the payment, then I can go here and select, I received the payment, and it'll automatically take it out of accounts receivable and put it into sales. If you're, again, cash basis, accrual basis, there's a difference. Most businesses, well, I should say a lot of very small businesses use the cash basis, and businesses that probably grows more than 500,000 or $1 million. A lot of them use accrual because that's what the IRS requires, and that's what a lot of banks require if you want to get a business loan and so forth. But again, that's a totally different workshop when it comes to accounting. But assume that you're doing cash basis, where you're not gonna record the sale until they pay you. So, but anyways, the system creates the invoice, put it into accounts receivable, and then when you get paid, it'll record it as such.
Hey, really quick, Eddie. In the invoices, is there a way to add shipping and taxes and basically pass through expenses, but have to be on an invoice for the customer?
Yes. So when you're answering all those questions in the beginning of the setup, it'll ask you where you're located, and it'll automatically allocate the sales tax associated with that city. But remember, if you're selling a service, services are not taxed. So it's only products that are tangible, that you can touch, or prepared food. There are some items that are not taxable, like grocery items and stuff like that. But for the most part, if you're selling a tangible product, you need to collect tax on behalf of the state. And QuickBooks helps you calculate that.
Great, thank you. And another question is regarding grants. Where would you allocate a grant income? And do you have to pay taxes on that revenue?
So I'm not a CPA, so I don't have that information, but if it's a grant, I mean, it has to be, it's not sales, but there are some programs where you do have to report it on taxes. But again, I'm not 100% sure if you do pay taxes on that. I would think that you don't, because it's a loan or it's a grant. But the PPP and the EIDL programs came with a lot of restrictions and regulations and so forth. The accountant that is doing your taxes should know more about that.
Great, thank you.
Let's see. So when you are creating an invoice, it'll ask you what are you selling, right? And to who are you selling? When you put in the customer information into the system, it just makes it a lot easier for you to do invoices, because, let's say I'm doing business with Target, then I'll do an invoice and I'll just select Target, and the system will automatically put, their address, their phone number, their contact information, all that stuff. And then if you have a PO number, the terms, if you're offering terms, and then the quantity of product that you're selling. And again, it will automatically create that tax liability that you have to collect from them. If you don't have that client in your system, it'll ask you, do you want to add a new vendor or a new customer? And here's where you would input all that information. You can also make a sales receipt. Let's say you make a sale on the spot and they give you, they pay credit card or cash or whatever. You can do a sales receipt as well. This is what the invoice looks like in the online version. Again, very similar terms: invoice date, the due date, the address, and so forth. When you are ready to make reports, there's QuickBooks. If we go back to the beginning of the homepage, on the online version, there's also a link here that says reports. Most likely you will do a profit and loss report and a balance sheet. Those are the two reports that business owners monitor on a regular basis. You can also analyze your cash flow statement of cash flows down here. So when you go to the report center, it'll ask you like which type of report do you want to generate. It could be standard, where it's just sort of like a summary of what you've sold and all the expenses that you've had in any given period. Remember that a profit and loss report is going to analyze a period. So it could be last month, it could be last week, it could be last year, or year up to date. And it'll tell you how much money you've made so far. If you select profit and loss detail, it'll break down all the different transactions that you did for every single account. So I usually don't do this one because it's very long. It could be many pages long, but it also helps you understand, like, let's say you have, $5,000 in the travel and you want to know, where does that money come from, right? I don't remember spending so much on travel, but then the detailed report will break down all the expenses associated with that account. There's another one, profit and loss year to date, and it also gives you a comparison with last year. So it'll show you, your sales and your expenses up to date, but it'll also compare it to what you did last year up to that specific date as well. So you can compare apples to apples. Okay. And then here on the right, it can also give you reports on your receivables, your customers, sales. Going back, let me go back to the homepage. I'm not seeing slides. Yeah, we didn't go over employees. So QuickBooks allows you to also do payroll. So if you have a lot of employees and you want to use QuickBooks as your payroll provider, you can do so. Here you would have to input all your employees, the name of your employees. Your employees have to sign what is it, a W-9 or an I-9 and a W-2? No, not W-2, W-4. I forget which one it is, but is where they put all their information, put the number of dependents that they have, their tax rate, and so forth, and that you can input all that into the system, and QuickBooks will help you do payroll. If you don't use someone to help you with payroll, I highly recommend that you use somebody, because in my experience, I've seen a lot of businesses get in trouble for not paying the correct taxes or failing to pay on time. And the rates sometimes keep changing every year because of tax codes and different rates that are adopted or dropped. And so it's important to use like a payroll service, and QuickBooks does offer this. When you are creating a report, this is what a balance sheet looks like. So it'll list again your assets, which is what you have. So in this case would be your cash, which is the checking that you have, the balance that you have in your checking account. It'll list your inventory. It'll list your accounts receivable, any type of equipment that you own. It will also list depreciation associated with that piece of equipment. It will also list intangible assets. Intangible assets are assets that that have a value, but you can't really touch it, like a patent or an invention that you're working on and you've invested a lot of money into it, but you haven't gotten the patent yet. So those are all things that are intangible. There's also another type of intangible asset called goodwill. So in this, I usually see this when somebody purchases another business. Let's say I want to purchase an existing restaurant, and if that restaurant is selling for, I don't know, 500,000, but the value of the equipment and the inventory and the furniture and computers and all that stuff, it's worth 250, then I have to allocate the rest, the additional 250 that I'm paying, in goodwill. And that becomes an intangible asset. When it comes to liabilities, again, is what you owe. So your accounts payable are your bills that you have to pay. You also see tax liabilities. If you owe the government taxes, you'll see it here as a liability. You'll have long-term liabilities, like what I mentioned, CDC loans or bank loans, or maybe you received the loan through one of your friends or relatives. Here's where you would put it. Or sometimes the owners of the company lends money to the company because they don't want to invest in the company per se. They rather lend it to the company so the company can pay them back with interest. You can also do that, and that would be a long-term or a short-term liability, depending on how you classify it. And then you have an equity section, which lists, again, what you've invested in the company and the retained earnings of the company, and then the net income associated with that period. And remember that when you have a balance sheet, your total assets is going to equal your liabilities and equity. If this doesn't match, then there's something wrong with the information that you've been feeding to QuickBooks. That's what I'm saying. A lot of business owners make a lot of mistakes, but they're accounting mistakes. So if you're not very savvy with accounting or don't understand the system very well, just stick to inputting sales and expenses. At the end of the year, you can go with your CPA or your accountant and have them sort of generate the reports or fix some of the accounts or add, money, not money, but add certain figures to certain accounts associated with the balance sheet. Because when you do taxes, if it's a corporation and you have more than, I want to say $250,000 in assets, you have to report a balance sheet on your taxes. If you have less than 250, I'm pretty sure it's 250,000. If you have less, you don't have to report a balance sheet. If you're a sole proprietor, you don't have to report a balance sheet on your taxes. But there are some companies that do have to report it, so you do have to keep track of this. But your accountant or CPA can help you with that at the end of the year. There's also a lot of companies that choose to hire a bookkeeper. A bookkeeper and a CPA are different. A bookkeeper doesn't need to get the certification of being a CPA. They don't have to, they don't even have to get a college degree, well, a bachelor's degree in accounting. They can get an associate's degree or just, learn the trade and start doing bookkeeping. So that's why they tend to be less expensive. You can get a good bookkeeper for about $150 a month or something like that, and they can help you do all these entries. If you don't feel comfortable with numbers, if you don't feel comfortable with computers, just pay someone to do it and concentrate on the things that you do well. Could be, getting new clients or, managing the staff or, other stuff. So, but if you do want to use QuickBooks on your own, then you can certainly do so. Just make sure you don't make any errors, because then, again, it's going to give you reports that are inaccurate. This is when you do a profit and loss report, it'll ask you, what dates do you want them to do the report on. This is what it looks like on the online version. It's a lot cleaner. You have all the different types of income accounts, your cost of goods sold, and then the various expenses associated with that term. The system can also give you a report on accounts payable and accounts receivable. Again, if you want to know how much money you owe or how much money they owe you, you can go to QuickBooks and generate these reports. It also gives you a bunch of graphs, like comparing yourself to last year, comparing your income with your expenses, and so forth. It's a pretty cool program. I mean, I like it. I think it's user friendly. I think if you get the if you understand the basics of accounting, I mean, you'll understand the system very well. But that's not to say that you can't learn how to input all these expenses and revenue and so forth. The easiest way to do it, like I said in the beginning, is run everything through your business bank account, and when you get the business bank statement, just input all that data into QuickBooks, and it'll help you keep track of that. So
we do have some questions, but before we get to the questions, I'd like to launch the poll for your feedback on today's webinar. That'd be greatly appreciated. And again, your input helps us with funding to continue bringing these webinars to you for free. All right, first question that happened quite around halfway. Sorry it took so long to answer, Janelyn. She asked, what type of subscription allows her to take photos of receipts and track mileage? She would like this feature since she's switching to paperless.
Let me check that real quick.
Great. Or we can come back to it and send a response out in the follow-up email as well.
Okay.
Great. Someone then asked, if you have QuickBooks already set up for a former business that's no longer in existence, how do you wipe out all the old information and input the new business information and accounts for the current business?
I think you need to archive it and then start a new one.
Great.
Or delete it if you're comfortable with that. But some business owners like everything's on the cloud, right? So and that's one of the advantages of having the online version. If you have the cloud version, you can your information is always going to be stored on the cloud. But if you stop paying for it, then you're not going to have access to it. So I would just archive it and start a new one.
Great. And then last question in the list is, what do you do for an expense for a large equipment that is depreciable? Will QuickBooks help you enter that expense, and if there are the multi-year impacts?
I don't think so. I think that's something that comes from your accountant. Because let's say you buy a piece of equipment that's $250,000. you'll allocate it as an asset. It'll reduce your checking account because you paid for it. And that will be allocated to an equipment account. But the depreciation is something that your accountant gives you. And then they remember I said in the beginning, there's like journal entries that they have to do. So they can do it every month, or they can do it once a year, where they, let's say you're deducting 50% of the cost of that piece of equipment, then $125,000 would be allocated to a depreciation account. Yeah.
Yeah, sounds good. I'll just leave everything open for a few more minutes as I also do some closing comments.
So let me show you this real quick.
Mm-hmm.
So these are the different types of membership that QuickBooks offers. And again, this is the one I was mentioning. Like, it's $25 a month, but it's $12.50 for the first 3 months. So I've used that one. Like, again, the Plus and the Advanced, it's for people that have a more complicated type of business or want to use more features. I think the membership where you can take the pictures of the receipts and stuff, I think it's the Advanced.
There's another question referring back to the grant income. I know we discussed we'd have to talk to a CPA, but is there a place to put grant income?
Can you repeat that?
Is there a place to put grant income?
So again, if it's a grant, it's money that was given to you and you don't have to pay back. So I would count it as equity, as an investment in your company. But in terms of taxes and liability and all that stuff, that's an accountant question. Because I don't do taxes, and taxes change every year. So not every tax, but different rules and things. So I don't do taxes, so I don't know how to answer that.
Great. Well, as we wrap up, I do want to thank Eddie for today's webinar, and that today's webinar was brought to you by the Women's Business Center. If you're not local to us, do find one that's local to you. They can provide you also the free business advising. If not a Women's Business Center, there are also SBDCs, Small Business Development Centers, all over California. Eddie himself is down in Southern California region. So if you're not local to us in Mendocino here, do find one local to you for free business advising. And I want to thank everyone again for being here. If you enjoyed this webinar and would like to see more, please do check out our website at westcenter.org. Eddie will be presenting pretty much for, I think, the rest of the year, or feels like it. Eddie has many more presentations coming up with West. Please do sign up. We'd love to see you again. And thank you, everyone, for attending.